Okay, well, we might as well begin, and if someone turns up late, then that's fine. So what we're going to do first is we're going to go over the classwork. These are usually in-class exercises. They're just basically quizzes to help us review what we've learned and make sure that we have actually covered everything. So we'll take turns reading and answering these. So for chapter 1, the classwork starts on page 21. Okay, so I'll answer the first one, and then Charlene, right? Kathleen? Okay. You'll answer the second one, and then Tiffany will answer the third one, and we'll just take turns going around. So question 1 is, who is required to file a federal income tax return? And the answer is individuals whose income exceeds certain thresholds. Okay. All right, Kathleen.
What determines your filing status on a tax return? Your age at the end of the tax year, your marital status and household composition after December 31st, your income levels, your I or B?
B is correct. Mm-hmm. It's based on your marital status and whether you have dependents. Number 3.
Which of the following is a possible filing status? Single, married, filing separately, head of household, or all of them? And I would say all of it.
That's correct. Mm-hmm. Okay, number 4 for 2023, what is the standard deduction for a single filer? And that is C, $13,850.
Which form is typically used for individual tax filing? Form W-2, Form 1040, Form 1099 MFISC, or Form 940. I got 1040.
That's correct. Mm-hmm.
By what date must federal income tax returns typically be filed? April 15th, May 1st, July 4th, or October 15th? A, April 15th.
Yes, that's correct. Okay. And then number 7 is, what is the penalty for failing a tax return? And that is actually more than one answer, but it's B is the most correct. The percentage of the unpaid taxes for each month the return is late. And if there's no taxes owed, there's no penalty. So B and D are both correct. B is most correct.
Which of the following income types is taxable? Wages from employment, interest from a savings account, dividends from investments, or D, all of the above?
That's correct. All of the above.
D.
I looked ahead to the quiz for this chapter, and it asks you to help identify some taxable and some non-taxable income. That's usually covered at the beginning of chapter 4. Like, remember when we said gross income includes all income unless there's a specific rule or provision that says it's not. We usually cover those rules in chapter 4. So if a question like that does come up and we don't know the answer to that yet, that's not a big deal. Okay, Tiffany?
What is a tax credit? A reduction of income that can be taxed. A benefit that allows taxpayers to reduce the tax liability by subtracting the amount from the total owed. The tax form, the type of tax. It's A, right?
No.
It's B.
That's a deduction. Yep.
Yeah, okay. Yeah, I always get those two confused.
Yeah.
The difference between credit and deduction.
Yeah, and a lot of people do, so that's why we have to drill on that. So a deduction reduces the amount of income that you owe taxes on. So if you're paying 10% taxes, if you have $10,000 in income, you would owe $1,000 in taxes. If you have a $100 tax credit, that reduces your tax by $100. So instead of owing $1,000, you would owe $900. $100 deduction, though, only reduces your income by $100. So instead of being taxed on $10,000, you'd be taxed on $9,900. 10% of that is still $990. So $100 credit, a $100 deduction is not nearly worth as much as a $100 credit.
How can taxpayers receive their refund from the IRS? Oh, it's your turn, isn't it?
Oh, yeah. How can taxpayers receive their refund from the IRS? And the only two options are direct deposit or a check mailed to them. That's A and B. It is possible, however, for a tax preparation company to print a check for you. But what that actually entails, what's technically going on behind the scenes, is not only are we a tax prep company, but we're also the representative of a bank. So we're actually opening a bank account in our customer's name. And IRS direct deposits their refund into our bank, which our service bank is a public bank. And then we act as bank tellers and we print a cashier's check for them. So when people say they want to pick up their check here in the office, then what's really going on is this direct deposit to a service bank that provides that additional service. Okay, Kat?
What is the purpose of Form W-4? To report your annual earnings to the IRS, to apply for an employment verification number, to determine the amount of taxes to pull from your paycheck, to request an extension for filing taxes. Is it A?
No.
No. Taxes on the whole?
Yeah, so it wasn't really fair because we didn't cover that on Monday. It is in the book, but yes, the answer is C. And a lot of people get these confused. There's a W-2 and a W-4. W-4 is what you sit down and you fill out when you first get a job, or
Yes.
if your tax situation changes.
Yep.
That tells your employer how much to withhold.
Yep. Yep.
And then the W-2 is filed by your employer at the end of each year to say how much they actually withheld.
Yep.
I just made a note. I won't hear it.
Yeah, that was another one I got confused too. Which of the following is not a deductible expense? Mortgage interest, charitable donations, vacation expenses, or medical expenses? C.
C is correct. Yeah. These we'll talk about in more detail in itemized deductions.
Unless you can
Chapter
somehow
6.
make your vacation.
A business trip.
Yeah.
Exactly.
Yeah, if it's a business expense and it's not a vacation, there are rules on like if you do go out of state for business, but there's a significant element of personal entertainment or personal pleasure involved, then you can only deduct a portion of your travel business, your travel expenses. So like if you own a rental property in Idaho, and then so you went down to make sure the building's still there and everything's in working order, but while you're there, you also went and spent 3 days with your parents, then you have to prorate all of your expenses between visiting the rental property and visiting your family. Okay, what is the earned income tax credit? That is a tax credit for low and middle income families, generally families with children, but you can also qualify without children, but the income limit is much lower, and that is a refundable credit. So the answer most closely matching that is B, a credit for certain people who work and have earned income under a certain limit.
What is it when you file taxes electronically? E-file, to file taxes using a computer program or tax preparation service online, to mail your tax forms, to file taxes over the phone, or to hire your taxes. A.
A. Yep, you can. All of these are. You can hire an accountant to file your taxes without e-filing or with e-filing, so that's completely separate. You can't file your taxes over the phone, but you can certainly have someone prepare them over the phone. And mailing in your tax forms is the opposite of e-file.
Yes.
And then Tiffany?
It's the slow boat to China there.
Hey.
Who can claim a dependent on their tax return? Anyone who's a friend living with them, only individuals over the age of 65. Taxpayers financially support another person meeting certain criteria, only parents with children under 18. The answer is C.
Yep, closest, best answer to that one is C. Okay, great.